Before you buy another stock, think about this. 90% of investors lose money because they skip this simple checklist. Warren Buffett uses it, Peter Lynch uses it, and today I'm giving it to you for free. These 10 things separate winners from losers in the stock market. Let's get into it because your money deserves better. Welcome back to the Money Mentor, where we think smarter, trade better, and win bigger. Remember our trading slogan, research first, profit always. Today, I'm breaking down the exact checklist professional investors use before buying any company. I'll even show you how Coca-Cola passes this test with flying colors. If you are serious about making money in the stock market, smash that subscribe button. Let's go. First, here is the formula you need to memorize. I call it profit formula. P, price evaluation. R, revenue growth. O, operational efficiency. F, financial health. I, industry position. T, timing and trends. Think of this as your investment GPS. Miss one element and you might drive straight off a cliff. Now let's break down all 10 checklist points using this formula. Checkpoint 1. P to E ratio, price to earnings. Think about this. Would you pay $100 for a business that makes $1 per year or one that makes $10 per year? That's what P to E ratio tells you. The formula, stock price by earnings per share. A lower P by E means you're paying less for each dollar of earnings. Think value. Coke's P to E is about 25. Compare this to the beverage industry of average 20 to 30. It's reasonable, not overpriced. Checkpoint 2. Price to book ratio. This compares stock price to the company's actual net worth. Think of it as, are you paying $2 for $1 worth of assets or $1 for $2 worth of assets? With a strong brand, Coke trades a premium P to B ratio, but that brand is valuable. Checkpoint number 3, revenue growth rate. Think about this like a report card. Is the company making more money year after year or is it stagnant? Look for consistent 10 to 15% annual revenue growth. That's healthy. Coke generates $43 billion in annual revenue with steady growth even during economic downturns. Think reliability. Checkpoint number 4. Revenue is vanity, but profit is sanity. Think, is the company actually keeping more money or just spending more to make more? Look for earnings growing faster than revenue. That's efficiency. Consistent earnings growth for decades. That's the sign of a champion. That's the sign of a champion. Checkpoint number 5. Profit margins. Think about this. 2 lemonade stands both make $100. One spends $90 to make it. The other spends $50. Which would you rather own? The formula here is net income divided by revenue multiplied by hundreds. Coca-Cola is 25% net profit margin. For every dollar they make, they keep 25 cents. Think powerhouse. Checkpoint number 6, return on equity. This tells you how well does the company use shareholder money to generate profit. The formula here is net income divided by shareholders' equity multiplied by 100. Look for 15% plus is good, 20% is excellent. Coca-Cola is consistently delivering 40% plus ROE. They think exceptional. That means they turn every $1 of shareholder money into 40 cents of profit annually. Checkpoint number 7. Debt to equity ratio. Think about this. Would you trust someone drowning in debt with more of your money? Same logic applies here. The formula here is total debt divided by total equity. Look for below 1.0 is good, but below 0.5 is totally great. Coca-Cola is around 1.6, slightly higher, but manageable because of their massive cash flow. Think context matters. Checkpoint number 8, free cash flow. This is real money left after paying all the bills and expenses. Think of it as, can this company pay dividends, buy back shares, or invest in growth? Coca-Cola example, if you take it that way, it generates $9 billion in free cash flow annually. That's why they can pay dividends consistently for 60 plus years. Think dividend aristocrat. Checkpoint number 9. Market position and competitive moat. Think about this. Is this company a leader or a follower? Does it have something competitors can't easily copy? Look for 3 signs. Top 3 in their industry. Strong brand recognition. Patents, exclusive contracts, or network effects. For example, Coca-Cola, number 1 beverage brand globally. Their brand is their moat. You can't just create 130 plus years of brand loyalty overnight. Think untouchable. Checkpoint number 10. Industry trends and timings. Think, is this industry growing or dying? Are you buying at a peak or a valley? Check these things. Is the sector growing? Beverages are stable? Is there regulatory risk? Are consumers' trends favorable? What's the overall market sentiment? Coca-Cola. Despite health trends, people still drink Coke globally. They are also diversifying into water, tea, and healthier options. Think adaptive. Pro tip on timing. Even great companies can be bad investments if you buy at the wrong place. And I mean to say, at the wrong price. Think patience. Let's see how Coca-Cola scores on our checklist. P to E ratio, reasonable for industry. P to B ratio, premium but justified. Revenue growth, steady and reliable. Earnings growth, consistent for decades. Profit margins, 25% plus excellent. Profit margins, it's okay. ROE, 40+% outstanding. Debt level, manageable with strong cash flow. Free cash flow, $9 billion annually. Market position, number 1 globally with massive moat. Industry trends, stable with growth potential. 10 out of 10. Think blue chip quality. This is why Coca-Cola is a Warren Buffett favorite. It passes every single test. There you have it, the 10-point checklist that separates smart investors from gamblers. Remember the profit formula: price evaluation, revenue growth, operational efficiency, financial health, industry position, and timing and trends. Think before you buy. Research before you invest. And always remember our slogan: research first, profit always. Never buy a stock just because someone on the internet told you to do. Think independently. Do your homework. Use this checklist. If this helped you to think smarter about investing, smash that like button and subscribe for more stock market wisdom. Drop a comment telling me what stock you want me to analyze next using this exact checklist. Remember, the stock market rewards the prepared. Think long term, invest wisely, and I'll see you in the next one.